Guys, we're joined today by Jonathan Tagg from Pam Goulding. John, it's really lovely to have you here. Thank you so much for making the time.
Yeah, thanks for making the opportunity available, Michael. Look forward to it on a wonderful day here in Mauritius, and let's kick on.
Absolutely. Days like this remind you why we live in paradise.
Yeah.
So John's, you've been here for 19 years, is that right, John?
Yep, 19 years. Anniversary, 20 years next year, so in March.
Amazing.
It's gone by quickly, quicker than I thought, but it's been enjoyable and been interesting.
You must have seen incredible change over that time. Mauritius as a country.
Yeah, so I think that I sort of got here at the time that the government was vested in driving up foreign investment. Property was one of the sort of vehicles that they chose, and the opportunity just presented. Pam Goulding, they were given the opportunity to have that sort of place in the market, provide properties out to foreign investors, and I think that's why the 20 years has gone fast. The uptake was almost immediate. Mauritius actually attracts people from far and wide, and from where we were 20 years ago to where we are today, it's just a vastly different environment, driven in the large part by foreign investment that's flowed, and consumers have flowed. People who've actually come along, bought, either moved to the island or start spending much longer periods of time on the island, and that has changed things substantially. We're sitting in a big mall here, with lots of offices, lots of foreigners. There are 2 to 3 times the number of foreign schools here now. The cities have grown, infrastructure's grown, and thankfully the property market's grown, and actually it's evolved quite substantially on the property side. So it is a completely different place to what it was 20 years ago. I'm a coffee drinker. 20 years ago, you wanted a coffee on a Sunday, you drove to Port Louis. You've got to go 40 minutes down the highway to get a coffee. Today, you have a choice of 25 different coffee shops open from early to late.
Yeah, that's incredible. And just as much as the island's changed in this period, I'm assuming the market, the local property market, must have revolutionized as well.
Yeah, so I think the Mauritius has been, good at recognizing what people are looking for. So the market started out as sort of big golf estates or marinas in quite remote locations. The government was then looking to increase infrastructure into certain parts of the island and also increase employment in those parts of the island. But I think the big shift came 2008 and 2009 where we had this big financial crisis come along. And I think that really was the start of the property market, because the government shifted what people could purchase. They introduced new property regulation that allowed foreigners to buy into the towns, and the 2 popular towns of either Grant Bay or Tamarin. And that was a massive shift, and I think that's why you've seen such a big growth in both of those towns. And that for me was probably the biggest influence in the property market in Mauritius. And it's probably attracted 90% of the growth. And I think that without that regulation change in 2009, I'm not sure we would have seen the growth that we have seen. If you look at it today, you have such a cross-section of what you can buy. You can buy sort of smaller freestanding developments up to sort of hotel-branded residences, where the hotels now have a vehicle to sell real estate in their hotels. That's aimed at investors that want part-time usage. You now have big sort of estates, but estates in more town-like environments where you can have golf courses, clubhouses, gyms, shopping. In the case of the one we're doing in the north, you have a hospital, you have a whole mixed-use scheme sort of kicking off. So that would be almost like that would be like building a new town, call it a smart city. So we've seen a big shift to what people are looking for. The big change, I think, has come with people wanting to move to the island. I think that kind of started happening from around 2014. Initially, we had investor buyers and probably buying for like 2 to 3 months usage. The big shift around 2014 was a much higher percentage of people wanted to move to the island, mostly Europeans, quite a lot of South Africans. And then COVID happened, and I think that was the big acceleration. I think people suddenly, post-COVID, became more mobile. Again, Mauritius adapting with the times. They introduced things like nomad permits.
The premium visa.
Premium visa, which allowed people to become more nomadic and shift around the world a lot more. Obviously, advantages are through tax. People can relocate for tax reasons. And that acceleration has allowed the market to even develop further. And I'm quite certain that it'll just continue to grow. And I think we've got to a point now where real estate is just becoming part of Mauritius. It's part of the economy now. It's people recognize Mauritius as a place that they can buy property. They recognize Mauritius as a place that they can move to, retire to, run a business from. So I think like we're at a point now where the market's just going to keep growing. And it's been a journey, the 19 years. There's been some very good sort of strategies that they put in place, the government, and we just sort of follow the government regulation. And hopefully that sort of progressive sort of mindset continues.
Yeah. Okay. And I mean, if you had to go back 20 years and give yourself a piece of advice, I think before moving here as an expat with the knowledge that you have now, sort of what would you tell your younger self?
I probably would have told myself come 3 years later. I think, because I think one of the big things about that 2008 and 9 sort of period was, it was just a big financial collapse. And most people's plans to do other things were put on pause. At the time I was 36, maybe I could have spent another 3 or 4 years in a city. But my movement, my choice to move out here was more based around a family, had little kids, was looking for lifestyle, and found a very raw, sort of beautiful environment. So I'm not sure I'd change that. I think that we had the benefit of, quite an undiscovered Mauritius up until about, as I said, 2014, 15, when the acceleration of the property market took place. We had a pretty raw environment. Now there are a lot more foreigners. There's a lot more infrastructure. I choose that environment. I still prefer a more active environment to sort of quite a raw environment. But I'm not sure I'll change anything other than the fact that there was a pause on global property markets, and maybe over that period it would have been easier to have been in an established property market rather than a market that was establishing itself and sort of got put on pause for a few years.
Thanks. John, maybe tell us a little bit more about PGP and what you guys, as Pam Goulding, are focusing on.
So Pam Goulding has been on the island for about 25 years. The business started out as a sort of local business, mainly sales and rentals. And then there was a foreign focus from around sort of 2005 when we launched the first golf estate down in Tamarina. And then I moved to the island shortly after that. And our focus has predominantly been projects. So a lot of it is from land into design of a scheme, and then into marketing and selling, the development. And that remains sort of core focus of ours, is just to stay close to developers, certainly developments that we want to be involved in. Our business is shifting a little bit towards resales now. So we're seeing, particularly in Grant Bay, we're seeing a maturing market, which means the number of off-plan sales, like project sales and resales, are almost on par with each other.
Okay.
So Grant Bay will continue to mature.
It's almost like the second-hand market.
The second-hand market kicks in. Europeans particularly prefer to buy completed units. There are also people on timeline, so clients. We have a lot of retirees coming to the island, really, lots and lots of retirees, Germans, UK,
The silver economy.
French, South Africans, Eastern Europeans, wanting to retire here, and they prefer to just get instant access to a unit. So an example would be like the Montchoisy Golf Estate. You'd have a choice. You can go and buy something off plan, brand new, but you have to wait 2 years. The alternative is you can go and buy something that's readily available. You can move in. So based on people's timelines, you get choices made. And what we're starting to see is about 50% of people want finished units, homes that have been purchased by another person, being resold onto themselves. Alternatively, people with a 1 or 2 year window prefer off-plan. Off-plan, there's some price advantages. There's also, you can choose the unit that you want to choose. There's the advantage of being brand new, so you're obviously not having the same maintenance issues that you might have with second-hand units. It's brand new, ready, got all the guarantees. So that's how we're seeing the kind of market move now. So Pam Goulding are focused in most markets, in both the resale and projects market, but I would say our main focus still remains projects. If you look at Tamarin is kind of in an earlier phase of development, so we tend to be focused on a lot of off-plan developments down there, particularly ones that are sort of sea-based, or the sort of hotel branded residences where people can come along, they can buy an apartment in a hotel, the hotel will run the property and the revenue side of it, and then you would get usage every year, and you can opt out of the rental pool in future if you want to use it maybe in 5 or 6 years' time. So you have different types of buyers. You've typically got people that come in with an investor mindset. They would probably go off plan because they're looking to get the capital growth, with time. So looking for inflation in property. You then have the end user who's looking at more, very often just sort of immediate sort of usage. Or alternative, you've got these sort of, as I mentioned, you've got sort of branded residences where you now have a lot more investors looking for alternative types of properties, and we do have a few more of those schemes available.
Okay. And maybe coming back a little bit to the client's individual journey, so sort of how does Pam Goulding assist with that journey?
Well, I think the first thing when a client comes into our space, into our business, the first thing is education around Mauritius. So what are you going to get from Mauritius? What kind of lifestyle does Mauritius offer? Does it match what you're looking for, essentially? Because I think very often the country and the destination is more important than the individual property.
Okay.
So you want to know that this is going to be a good fit for the person. The second thing is you would talk about different regions on the island. So the island is interesting from the point of view that the north is sort of quite a built-up, infrastructure-rich environment, and it will attract certain types of people that are looking to move. But then you have a place like the west, which is more nature-filled, a lot of sort of water sports, beautiful gorges, mountains. That might attract a different type of person. So you'll spend time looking at the regions and saying, okay, let's try and find a fit for what region will suit you. Because I very often find that
then look for the property.
And then look for the property, exactly. So then it's getting into the property type. So you've then got to establish, is the guy looking for like an off-plan unit versus a completed unit? So even if he's looking at off-plan, you can show him completed.
Yeah.
So most of the developments that we handle are in a third or fourth or fifth phase.
Yeah.
So take a golf estate, for example. We could have already sold 300 units, they delivered, and now you've got a consumer who's got a 2-year timeline. You can show him exactly what he's buying. Yeah. You can see the apartment, the square meterage, the quality of finish. You can understand the pricing. So that would be the next thing. It's like, what is his landscape from an investment point of view? Is it an immediate? Then obviously it's an off-plan. It's a completed unit. If it's a more longer term sort of outlook, then we'd suggest people go off plan. So then they can find exactly the location they want in the development. They've got more choice. They'll probably have really good capital growth because they've got a 2-year period where they'll purchase the property. So that would be the next part of it. Are they sort of more in the off-plan space or resale space? And then it's around the particular developments that we handle. So each development has something different. If you're going for like a branded residence in a hotel, that's more around the beach, more around like a serviced offering. You've got concierges and spas and restaurants, and that's a certain type of person, but they would be more on the investment side.
Yeah. You don't want to live in a hotel.
Yeah. And other people might say, hey, I'm looking to move to the island, and I'm a keen golfer, I'm a keen paddle player, I'm a keen surfer, or I'm a keen kite surfer, whatever the scenario might be. So you're trying to match like what their requirements are with the development that you've got. And then there's a very, very important component, which is, are people looking for a community-based lifestyle? So a lot of clients moving from abroad don't have networks here. And a lot of what we do on the island is we do network people with other people. So we'll have a lot of events to introduce new people to existing people. You tend to find people that move to the island have a more sort of outgoing social.
Of course, it takes a bit of guts to leave your country.
It takes guts to leave your country. You're looking for sunshine, you're looking for outdoors. So that's a certain type of mindset that people have. They're looking to network with a new group of people. So it's not just their own, countries, or people or cities. It's a different group of people. They're very often hobby-based. So they could be card players, bridge players, golf players, paddle tennis players. They might want to learn kite surfing. So these are all different networks. What's also interesting is if they're going to be working here with families, well, that has another dynamic because they need to be close to offices, close to schools, and again, close to a network so they can integrate. Because I think people who are in the younger sort of space are still looking for an active sort of social life. So that's just consulting with a client, making them aware of where they should buy, what they can buy, and then the advantages around everything that they could buy based on the client's own criteria. The only way to establish that is to spend a lot of time with clients. So typically, you could spend up to a whole day with a particular client in a region, and then spend another whole day with that client in another region. And part of that process is just getting to know the person, the agent getting to know the buyer's requirements, the buyers getting to understand, the offerings that are out there. Essentially, if we do our job properly, we'll find a match. We'll find something that suits the client. The thing with property is nothing's ever 10 out of 10. You're always, especially on a small island, you're having to try and find the best possible fit, because everyone comes here with the view of a little house on the beach with a jetty and a boat for $1 million. That's the dream, but in practical reality,
that's not the reality.
Foreigners, I think to the benefit of foreigners, are designated certain kind of developments they can buy into, which means they've got quite community-based purchases, and I think there's an advantage to that, because I think it brings a different network, group of people, social interaction, type of quality that they buy.
Makes your integration into the island life easier.
Especially from an expat point of view. And when I got here, it was a relatively small expat community. You knew everyone. Today, it's huge. You see new people every day. There was a time when I was first here, for the first 10 years, I almost knew everyone. And now it feels like I almost know no one, because the community just got so big. It's just growing really, really quickly. And a lot of young people, which is nice. So
agreed.
So that's the big difference. I think that was a COVID thing. I think people realized that they didn't need to be city or country bound. They could be more remote. Employers became more understanding. Where people worked from, how they worked, changed considerably. And the things that people did changed considerably. I think if you look at the job titles pre-COVID and post-COVID, it's just a different environment now, particularly around the digital space and how people can commercialize that environment.
Of course, Okay, well, thank you for that.
Okay, it's a pleasure.
So John, obviously you've been on the island now for almost 20 years. What is your personal investment philosophy when it comes to property in Mauritius?
I would look at the region first. I think that's fairly important. So different regions offer different things. I'm more now in an investment mindset, so I'm looking more at ROI and where am I going to get the most capital growth, where am I going to get the most rental return. So that's my personal requirement, because my own housing requirements are taken care of. So what I would look at there is what's on offer. I like the hotel branded residences. I think there's a unique opportunity there. The island runs exceptionally high occupancies.
Yes.
The hotels have really high daily rates, and I think anyone looking at it from an investment point of view, that's attractive. And I've purchased into those sort of schemes. If you're looking at what does happen with properties, you go through different stages with property. So what you do is you go through like a house stage. You have the kids, you live in a house, the dog,
white picket fence.
The pool, the dog, the double garage, the bedrooms for everyone. And then my kids recently, have gone off to study, and now you go through a different change. So now you're looking more at sort of an apartment-based lifestyle. I think that's the big thing I find here, is that most people that come into our market come with a housing thought. I'm going to go and find a villa, which is what we would refer to almost like a cluster house or a freestanding house in a complex. Most buyers end up shifting from a house to an apartment. The reason for that is it's very outdoors. So if you're living in Europe, maybe even South Africa, you would spend more time indoors. Here you've got a tropical climate, 365 days of tropical weather. You're outdoors a lot more, so the space you require is less.
Yeah.
I mean, you just don't spend the same amount of time in your living room, for
example. I find that too,
So you find a lot more people opt for apartments, and then they look for spaces around the apartment important for them. So if it's a golf course and clubhouses and gym facilities and shopping facilities, they tend to find that's attractive, but they might have come into the market looking for a house. So I've gone through the same evolution. I've gone through wanting a house, wanting to be close to the beach, to more now personally looking at properties in gated communities that have large established expatriate groups. And my own philosophy now is, I think that's where Mauritius is going. I think it's more going into people buying into social communities and looking for estates, even if they're only 60 or 70 units, 60, 70 units, we've got projects 60, 70, the water, the sea's over there, it's a smaller community, the mountains are behind you, but you've still got 60 or 70 people in that environment that have a like-minded mindset. They want to spend time on the beach, they want to go and walk in the gorges, they want to be part of nature, and it's nice to be in that sort of community. On the larger scale, you've got something like a Moshwazi Golf Estate, which is a really big golf estate. It'll end up being 1,200 homes. Obviously have a much bigger community. You've got shopping malls and clinics and golf course and clubhouse and leisure center with gyms and all that kind of stuff. So that's a different type of purchaser. That's what draws me currently. That's what I'm sort of quite interested in personally. But it's up to the consumer, and I think it's very driven by what are they specifically wanting to achieve, and it's what we discussed earlier. How do you navigate that? But personally, that's the space I'm in right now. I'd probably be more interested in either the hotel branded residences or the bigger estates.
Yeah. So John, maybe share with us a two-parted question. Share with us a little bit what's been interesting over the last sort of 2-3 years, and what's coming up that's got you a little bit excited or interested.
So I think what is interesting in the market is a strong shift towards high-end luxury. So if you'd said to me 5 or 6 years ago that a development of like 50 units could be launched, priced from sort of $2 to $12 million, 5 or 6 years ago I would have been skeptical. Were there enough consumers that would come along and spend $6, $7, $8, $9, $10 million? In all likelihood, I would have probably said no. But if you look at today, you've got a scheme like the Saint Joran, which has got properties.
Where's that located?
On the East Coast,
Okay.
Part of the Saint Joran Hotel. Very luxurious destination, very luxurious sort of 5-star hotel. We sold the property there for $13 million, and that's exciting.
Yes.
So the market is shifting more towards luxury. It's shifting more to being able to attract luxury, high net worth buyers.
And I think that speaks to the country's infrastructure as well that can support that.
That's exactly what it is. I think you wouldn't have had that 6 years ago. I think guys in that sort of space would have looked at it and said, well, maybe the hospitals are not there, the medical's not there, maybe the school systems aren't there, maybe the restaurants, the sports facilities, the hobby kind of environment's just not there, so they probably wouldn't have done it. But that's where we're seeing the shift now. And there are a number of other hotels that are looking at like $8, $9, $10 million villas that sit on the coastline, beautiful views, nice beach, hooked into hotels. So that's exciting because you've got a different type of consumer coming into it. I mean, from an estate agent's point of view, there's nothing nicer than a $9, $10, $11, $12 million deal.
Oh, sure.
Makes up for some of the hard work. So I'd say that's the really interesting shift. I'm seeing more and more developers are now thinking, okay, we can sell a number of units to $4, $5, $6 million buyers. That may not have been possible 6 years ago. So you see developers shifting with the trends. I find that really exciting. I mentioned earlier the branded residence. I think that's really interesting. The Sun Resorts guys with a company called Two Futures did a really interesting project down at the La Pirogue Hotel in Flick and Flack. Pricing from like $1 million to $2 million. It's pretty much sold out. I think there's 1 unit left. And that, 52 units at that sort of price range, it's sold out really quickly. We'll finish in about, like 9 months it's finished. Sun's a great hotel group. They run, really solid hotels. I'm pretty certain that the investors will do well off the investments, but equally, you have an opportunity in a place like it. If you want to live, you've got the whole infrastructure of Cameron close by. So, although yes, you're living in a hotel, that's where you're coming back, but your days on the beach, your days at the yacht club, your days in the mountains, or it's in the gyms, and so I'm excited by those sort of products that will now attract clients. The last one would be the sort of shift to mixed-use type development. So we haven't seen anything in that space since I've been here, where developers are looking at integrating leisure, shopping, and residential apartments. And what's interesting is that is interesting to both the local market, the Mauritians, especially because the pricing sits between sort of 10 and about 25 million rupees. So from about $250,000 up to about $500,000. So pricing is interesting to both foreign clients and to local Mauritians who are looking to make investments around the coastline. I think that's will be an interesting space for Mauritius. It means that more and more leisure facilities, retail facilities get built. And I think that's the first shift to kind of like a bit of a town city mentality.
Yeah.
It's very common for people living in Europe to have a multi-purpose building, shops, galleries, stuff below, and apartments.
It creates more walkable communities.
Yeah, it's walkable. You have more common facilities, so you'll have parks, walkways, golf. The apartments are typically smaller, but the lifestyle is bigger.
It doesn't matter because you're not spending as much time there.
And it feeds into a different price range. So now that you're in at $250,000, it brings a different type of consumer. I think it plays into this nomadic sort of lifestyle that people have had. So Mauritius could be like a 4 or 5 year play, and then they might bolt off to Dubai, and then they might be in somewhere like Malta, and then they might be back to Mauritius. But the fact that Mauritius has solved the investment side of it with strong, with reasonable rental returns, these properties can just stay as assets for people. So that's probably the third play that I'm quite interested in. It's we've kicked off our first. There's actually currently we've got 2 developments in that space. The pricing is interesting, and I think the fact that clients have these services, I think, makes for an interesting property offering for the consumer. Yeah. Okay, Michael, the interview shifts now. You've been asking me questions. Now I get some time.
I'm going over the grill now.
Yeah, so I think it's really around mortgages. You've established a mortgage origination business on the island, which I think is much needed, particularly with foreign clients living in foreign communities. They want to rather work through mortgage originators. They can get a number of different offerings from different banks. What we're also finding is that there are more buyers. As I said, we're kind of seeing shifts towards $250,000, $500,000 products. So we're seeing people looking for different options. We're also seeing shifts to resales, and people need to pay more immediately. So often they need sort of development finance. So maybe we can just sort of kick off there, your business as far as helping in the mortgage origination space. Secondly, how many banks would you typically approach for mortgage finance? And then what sort of profile of buyer you see currently sort of requesting assistance in the mortgage space?
Okay, thanks. That's a mouthful. So firstly, yes, our business, I mean, like you said, it's an admin process that we facilitate.
Yeah.
So it's a bit of a hand-holding service, really, to offer the clients, trying to offer quicker turnaround times and offering a wider variety of mortgages, banks they might not have approached themselves, which we then approach on their behalf. So there's about 7 banks that we deal with currently. Not every bank fits every client's profile. So we'll do a quick screen and say, depending on the client's nationality, maybe their personal asset position or the value of the property, some of the banks have got their own niches as well. So we try and find a good fit for the client and the bank as well. And then we'll present typically at least 3 to 4 offers. Okay. Sort of within a 10-day turnaround time is what we aim for, to get those 3 or 4 offers presented to the client.
And you're finding what sort of age group of people are looking for mortgages?
So it's becoming younger and younger.
Okay.
So when we started the business, we haven't been going that long, it's been a year now, but when we started the business, it was guys sort of 55 to 60.
Okay.
And in Mauritius, you can get a financing up until age 65.
Yeah.
So guys taking short 5, 6, 7 year loans, and they're just looking for, often they were buying for 600, 700, 800,000, and they're just looking for 200 to sort of tie them over. They were maybe just want to allocate that much capital to the country as well. And where now this shift is coming with a lot of young families, especially Europeans. They have got the cash but don't necessarily want to make the capital commitment to Mauritius, or they are willing to make a capital commitment but the cash is tied up in other investments, often property. In Europe, they don't want to make a rushed sell. So what they do then is, these are young guys and ladies, late 30s, early 40s, and then they can get 15 and sometimes even 20-year tenors, which make it very affordable for them, especially if you finance in rupees. Find the clients earning US dollars or euros are then repaying in a currency which is much weaker than theirs and traditionally depreciates too. So year on year, the mortgage gets, together with inflation, the mortgage gets a lot cheaper.
So then they would be taking rupee mortgages?
Yes,
Okay,
a lot of
okay,
them do
okay.
opt for that. It's
So
an option they're not always aware of. They
Okay.
think they have to finance in euro or
Okay.
USD. So you
Okay.
don't have to finance in the same currency
you
that the
purchase in.
property is being sold in. So
Okay.
you can buy a property denominated in euros or dollars, but then you can do your financing in rupees, which from my position is quite an attractive option.
Okay. And what we find, and maybe your business finds it as well, we often find young people living on the island, renting, but then wanting to invest in investment properties.
Yes.
So their view is they'd like to buy something for residency. So for your viewers, you need to purchase a property for more than $375,000 essentially to get permanent residency for you and your family. With a lot of the visas on the island, they're only 3-year visas or 1-year visas, and people would like a more permanent structure. So they would go and say, look, I want to put $375,000 or $500,000 or $600,000 into a property, generally a rental yield property, want to use finance. Are you seeing a trend in that direction? Because we are.
Absolutely. So we're seeing, like you said, I mean, young professionals,
Yeah.
often still single or maybe newly married. They come from South Africa or Australia, US. We've seen guys come from Middle East, Europe. They spend some time in Mauritius, and like you said, 34 years, fall in love with the place, want to make an investment here, see a good opportunity, make the purchase here, and then move on.
Yeah.
And with the intention of one day returning to Mauritius again, either later in life or when family is a bit more pressing as well.
Okay.
So
Interesting.
I think it's an exciting development for the island too. Yeah.
We're also finding like it's interesting in the sort of mortgage space that guys who are buying resales will often look to finance. So you've got two different types of guys. A guy goes off plan, he's typically got 3 years to pay. Would only start with a 10% deposit. A development would normally take like a year to start construction. So he's got the first year of only having 10% down, then he's got the next 2 years to fund the property. And I tend to find most of those guys are cash buyers. And then you've got the guy in the resale space. They've got to purchase, come up with the cash in full, don't necessarily want to liquidate something versus the off-plan guy, he will liquidate something later. But now you have to immediately liquidate because you purchase and 3 or 4 months later you've got to come up with the funds. Are you finding that that's where most of the finance sits in the...
Absolutely. Like you said yourself, when you're buying off-plan, you've got a bit more time to come up with the cash, whether it's through your company or whatever is generating the cash flow for you. So you've got a bit more time to plan the payments. Whereas obviously a resale you're buying, you have to make the full settlement virtually immediately.
Yeah.
And the second thing is also the recent legislation changes. It's a lot easier to get a mortgage for a resale than it is for a off-plan development. So a lot of the off-plan developments have exclusions or minimum cap limits. So you have to contribute, say, the first $750,000 yourself, and you can finance the rest. Whereas resales have no such restrictions. So it is easier to get a mortgage. Because of the legislation change, there's been a reduction in the amount of mortgages on the island, but that means the bank's appetite has increased for mortgages correspondingly. So the resales are quite easy and a very attractive option to do.
And do you find people will chat to you about mortgage origination before committing to a purchase, or do you find they commit to a purchase and then through the agent are reaching out to you to get a mortgage?
So it's a parallel system at the moment. So we've agencies and yourselves have been very, very good to us. That's where we get a lot of our leads from. As our channel and our social media and presence is growing, there is a steady lead base that is increasing from there as well. So Mauritius is an interesting system. There's no real pre-approval system as you might find in the UK or South Africa, where the bank completely vets you and says, pretty much no matter what you buy, we'll give you $1 million or $2 million or $3 million, whatever the price tag may be. But in Mauritius, you kind of have to find the property, get your initial offer to purchases and all of that in order, and then submit that documentation to the bank a long way. So it's better to do your own calculations, find what you're comfortable spending, then approach your real estate agent, find the property you're looking for, and then we can assist at that point.
And what would you suggest from a loan to purchase price ratio? Are you, where you're comfortable to offer finance through the banks at a foreign level? Bear in mind, these are foreigners. They sometimes are just resident here, so obviously the bank has a lot more risks. They don't know the client. They might not be banking domestically yet. What do you find the appetite from the banks?
So a great question, Don. Because I find that Mauritius has high capital appreciation and the rental yields are maybe not as high as you might find in other developing markets like South Africa. Because your capital play is what you're focusing on, I would finance about 50%.
Okay.
Because you are then pretty much guaranteed inclusive of all additional costs with maintaining and running a property and your bond repayments, that you'll find that the property washes its own face, and there's a little bit of extra for vacancies and etc. as well. So that, I think 50% is, you can do the calcs on the individual properties, but as a rule of thumb, I find that 50% is a good mark.
Yeah, I find something very similar. I find that you sort of cash flow positive at around 50%, maybe comfortably 2 years into the process, and if there's a little bit of wobble, you know, in the first 2 years you can cover it quite. So that would be about my suggestion. You know, if you are maybe early 30s, then I might take a slightly higher mortgage, but then I can take a longer term.
Yes.
So maybe I can take a 25-year term, and on the 25-year term, I'm obviously bringing down my capital payments, and for that reason, maybe I might go to 60%. But I think anyone probably mid-40s and upwards should probably look around 50%.
Agreed.
Yeah.
So I was going to say the same thing, maybe late 40s and upwards, 50%. If you're younger than that, and especially if you're earning hard currencies, either euros, dollars, or pounds, I would look at I'd stretch it as long as I can. Because of the way the currencies interact with each other. I think that's probably your best play as well.
And then, like a final question on it, in the mortgage space, what are people typically buying? You know, so the types of properties that they're purchasing and are looking for bonds. Is there a type, or is it sort of quite varied?
So I think we're getting a lot of. I'm not sure it's reflective of the type of properties people are looking to finance, but rather reflective of the amount of properties in the space that are being sold, and that's that mixed use sort of smart city or community living that you described earlier. And I think that is really what the guys are. There's a lot of that being sold. Most of our deals are, I want to say, the 300 to 700 price range would be about 80% of our business.
Okay, yeah, it's what we see as well. And I think beyond that, people actually may still be using finance, but it's not domestic.
Yes, I think that's sort of, I mean, the 5s and the 10 millions, I think a lot of that is there's family office or trust structures behind, which are providing that financing, maybe off balance sheets of companies. That gets a little bit, that's a different conversation.
And then one I know the answer to, but maybe you can explain to the audience just around financing a property at the residency amount of $375,000. So you need to spend $375,000 to get residency. And one of the queries a lot of people have is, well, if I do finance it and I'm only putting down, let's say half, I'm putting down $160,000 or $180,000, can I still get the residency?
Yeah, absolutely. So this is something we could also get asked a lot. You can buy the property in the name of a structure, be that a trust, society, company, doesn't matter. You can have a tenant in the property and you can finance the property. Up to 70% of the value of the property you can finance. And you can still get your residency application. So Mauritius is quite investor friendly from that point of view.
Yeah, I think it's a good part. It's a good one for the audience. In that, I think a lot of people are confused by.
They miss that one.
Yeah. Because some countries you're required to put cash in or whatever the scenario might be. Well, that's my interviewing part of the
Brilliant.
part of the show. Thanks, Michael.
Thanks so much for coming, John. Really appreciate it.
Yeah, good times. Thank you.